Yes, you are an absolute moron. At least that's what the banking system thinks of you. We already know the world of banking has its problems, but you probably have no idea how deep the rabbit hole goes and just how much power banks have to influence our lives. For example, when we're told the economy is doing bad because of some external factors, usually that line is nothing more than misdirection. In reality, it's mostly the fault of investment banks.
Naughty, naughty.
Who are responsible for engineering basically every financial crash in history. Crashes like the one we may be on the verge of now. And to find out how they do it, you just have to follow the paper trail. This video is a story of just how much power modern banks have over our world, and how when just about any financial crisis happens, chances are, usually they are the ones to blame. And at the same time, they are very quick to blame it on something else. But here's the thing. I'm not going to focus this video on the entire banking industry as a whole. Instead, I want to focus on how much influence a single bank can have, and that's why this video is going to be about one bank, to highlight that this one single bank has helped cause some of the biggest financial catastrophes over the past 100 years. Goldman Sachs is one of the biggest banks on earth, currently the 24th largest in the world. Its assets are estimated to be worth over $1.4 trillion, which is more value than what entire nations like Australia, Spain, or Mexico produce in a single year. It might seem like a modern organization, but Goldman Sachs has been around for a long time. It was founded in 1869 by German immigrant Marcus Goldman, who built the company with his son-in-law Samuel Sachs. And the first story of a collapse it helped cause goes all the way back almost 100 years. You might not be aware, but apparently Goldman Sachs was a major force in making the Great Depression happen, all because the bank got too greedy. First, it created Goldman Sachs Trading Company, or GSTC. It issued $100 million in shares with the company, then bought all of them with its own money. It then immediately sold almost all of them back to the public at $104 each, netting itself a healthy profit from premiums. It then relentlessly bought shares in itself, artificially driving up the price and of the company's value. But for Goldman, this wasn't enough. So it began to engineer an endless pyramid of investments. By sponsoring a network of trusts it primarily owned, it was able to effectively create the illusion of additional money, lending money against the previous trust to funnel it into the next, basically turning each trust into a front for the next that acted as a massive Ponzi scheme. But inevitably, this pyramid would have to collapse. Eventually, the bank's losses amounted to almost $500 billion in today's money, and have been considered a major cause of the financial collapse that led to the Great Depression, a decade-long period that was one of the worst times in modern economic history. But 100 years ago? That's almost ancient history, right? Well, let's move on to more modern times. The dot-com bubble of 99 and 2000 was one of the biggest bubbles in history, and yep, you can bet that Goldman Sachs was there to profit off it. The concept was simple. Tech companies that had almost no revenue and weren't much more than an idea were taken public by Goldman via an IPO, and then hyped by the bank and the press, causing millions of investors to buy the company's shares. Eventually, the share price would drop dramatically when these companies failed to turn a profit. But by then, the investment banks had already made their money. This philosophy was summed up perfectly by journalist Matt Taibbi. It was as if banks like Goldman were wrapping ribbons around watermelons, tossing them out of 50-story windows, and opening the phones for bids. In this game, you were a winner only if you took your money out before the melon hit the pavement. The situation was made even worse by new laws implemented at the time. Previously, a company had to have existed for 5 years before being listed on the stock market, and 3 of those years had to be profitable. But these laws were ended by US Treasury Secretary Robert Rubin, allowing tons of scammy, low-quality companies to be listed, companies that would eventually lose billions for investors. And what was Rubin's previous job before becoming Treasury Secretary? He was co-chairman of Goldman Sachs, a bank he worked at for 26 years. The end result of the dot-com bubble bursting was $5 trillion in money being lost, in part due to Goldman Sachs and one of its former employees. Think things couldn't get any worse? Well, my friend, you have no idea just how much damage a single bank can do. And I'll talk about that in a minute, but first, just wanted to let you know we have an amazing newsletter of 75,000 people plus that are receiving amazing golden nuggets of financial information directly into their inbox, wrapped up in beautifully written stories. There's a link in the bio for that. Okay, so let's talk about the next crash that Goldman Sachs had a hand in, and it's an event that most people watching this video have lived through. The 2008 housing collapse in the United States was one of the most devastating financial crises in history and had far-reaching effects across the globe. And wouldn't you know it, Goldman Sachs was there to make it much, much worse. First, the bank created packages of mortgage-backed securities filled with with terrible, low-quality mortgages, then paid credit agencies to give these securities false ratings, making investors believe they were safe. Behind the scenes, Goldman knew the mortgages in these securities would fail, but misled investors all the same, something the bank finally admitted to in 2016. When the 2008 collapse came, investors around the world collectively lost trillions of dollars, and in the US, banks required a bailout from the government to avoid the situation being made even worse. The bailout was orchestrated by the US's new Treasury Secretary, Henry Hank Paulson. Want to guess what Paulson's previous job was? Yep, he was the former CEO of Goldman Sachs. During the bailout, Paulson chose to help bail out insurance company AIG, likely because AIG owed Goldman Sachs $13 billion. In short, he used taxpayer money to bail out AIG so it could help pay back his former employer its debt. But this was a courtesy Pullman didn't extend to Lehman Brothers, the main competitor of Goldman Sachs at the time. Instead, Paulson's government allowed Lehman Brothers to collapse, only then creating a complete bailout package that would be directed to the entire financial industry as a whole. Are you starting to see a pattern just yet? I sure am. But Goldman wasn't just content with ruining the lives of millions of investors. It started turning its gaze to ruining entire countries as well. In the early 2000s, Greece was in a serious financial predicament. Heavily in debt, it wasn't able to meet EU's deficit rules. The country needed to borrow more money, as it was spending far more than it was bringing in, but couldn't because it was at its limit. So in comes Goldman Sachs to the rescue. Goldman effectively cooked the books of Greece, allowing it to borrow an extra 1 billion euros as swaps, which meant the loan wouldn't be added to the country's official public debt, allowing the nation to continue borrowing money it would almost certainly not be able to pay back and to stay within the EU's rules. But Goldman had so little faith in Greece's financial situation that it immediately bet against its own customer, taking out an insurance policy against Greece's debt that would pay out if Greece's economy failed. And wouldn't you know it, Greece eventually did fail. The country's economy almost totally collapsed in 2008 after the subprime mortgage crisis hit the United States, a crisis that, as I just explained, Goldman Sachs itself helped to create. So it's obvious that Goldman Sachs has a pretty terrible history, and there is so much more that I could talk about, like how a former managing director of Goldman ended up as president of the World Bank. Under Zoellick, the World Bank was accused of massive corruption, with $2 billion disappearing due to alleged computer glitches, or how, in the words of one of the bank's own former VPs, Goldman takes advantage of retirement pension funds, selling overcomplicated financial products to clients who don't need it, preying on their lack of knowledge and netting millions of dollars in upfront fees from their clients. But I am going to leave these stories for now and end with something that is a little close to home right now that the bank is also involved with. Right now, we all know that gas prices are too damn high, which is something that in the summer of 2008 was also a problem around the world. According to the political narrative, this was the result of a low supply. However, this couldn't have been further from the truth. In reality, it was just because after the 2008 housing bubble, banks needed a new market to inflate, and the market they chose was oil. In the 6 months leading up to the 2008 price hike, global oil supply had increased and demand had decreased, normally an effect that would lower prices. However, investment banks like Goldman were manipulating the market, driving up prices. Through pension funds and other institutional investors, they pumped billions of dollars into oil futures, effectively turning oil from a commodity into a stock. And each time a barrel of oil was traded, the banks made money, but the price also rose. By the end of 2008, each barrel of oil was being traded at an average of 27 times before it was actually consumed, seriously increasing the price for consumers but putting billions into the pockets of banks like Goldman. And so this is how Goldman Sachs and other investment banks are responsible for manipulating the world economy and making life worse for just about everyone. But here is the worst part. It is our fault that they can even do this. Investment banks like Goldman Sachs are primarily funded by smaller regional banks, as well as pension and insurance funds. Funds and banks that use the money of their customers, people just like you, to invest with larger organizations. So when Goldman Sachs tanks the economy by manipulating the market, it's your money they're using to do it. Money that's flowing to them in an endless stream that in the end is exactly what gives them the enormous power over the global financial scene. So the next time you invest your money with a local bank, or you buy insurance, or you invest in a pension, ask yourself the question, Where exactly is the money flowing? And if you can't answer that question, maybe now is the time to find out. And you can always do that by following the money. Thank you so much for watching. If you enjoyed this video, you might also enjoy the other video we did about another investment company that owns more of the world than any other. There's a link on the screen to it now. Just a reminder again about our newsletter. 75,000 people love it. There's a link in the description. Also subscribe. We would love to have you part of this amazing community of like-minded individuals. And finally, we have a private membership on all things finance and freedom to help you master the journey of becoming a free sovereign individual. Link in bio for that, and I will see you in the next one.